What's up, guys? Welcome back, Johnny Pips 28. We're heading straight in for a trading recap. We're trading gold. I got just the classic gold screen up right now, but I'll go to my trades. I took 3 trades this week. This first one, we had a big bullish push at pre-London. It looks like 6 p.m. is London session. Pre-London, big bullish push. Now, this was a huge candle. The entry, as you can see here, what I've got is I've written down. I got the reason for my entry, and the stop loss was under the 15-minute. The trade management, as you can see, it's all written there anyway. So there's a 15-minute bearish push downwards, and then the bullish wick up. So this candle printed, it went down and then went up, and I took the flip. And then I was managing it. I was managing it aggressively, purely because if you've got big bullish momentum, it would have kept it going. It would have kept it going and would have just ran and ran. But instead, like I said, I managed it much more aggressively. The original stop loss I had was a 1%, but instead we only took 0.6336%, which is good. That's the idea. The idea is to reduce and manage risk. So that one was just a 0.633% loss, which is great. This one, I should have these more consistent, but that's okay. This next one I took was a gold buy. It's ended up turning and hitting what would have been my stop loss. But the idea here was we had a level that gold pushed down, tried to come back up and came down, and then it went all the way down. And he's trying to come back up really into this level, and you've got this big gap to fill. So with this clean range, big gap to fill, I guess this is sort of what we're targeting on the macro level. This down here was a lot of noise that we didn't like, so I needed a closure above, which is what we got. Push down, which is what we got, test this level, and then it came back up. As it came back up, I took the entry. So we got here targeting the big candles on the left hand side, which is all this. The trade management, the fill of the wick of the previous hourly was our stop loss at break even, which was at about 50% and stop loss at break even. So 50% was taken at 22 pips, and then we had trailing stops on the way up, and they got hit at 7 pips. So 50% was at 22, 50% was at 7. The halfway point between the two of them, it's a total of 14.7 pips, which is great for that day. And then our third one, this was similar to the first one, the first loss that I took. But for this one, it was similar and different in ways, right? So this one, we had a big bullish push, just ran. With the most recent step was down here. The most recent resistance that I broke was down here. In hindsight, looking back on this, the entry I should not have taken. This entry I should have taken maybe at the break of the week, or I should have waited for this resistance to print and then take the buy on the way up. But I took it, I got in, and then as I got in, again, I was managing it very aggressively. Purely because when there's a big push up, and if volume is there, it should be running, and it should be bottom wicks of previous candles should not be breaking if there's a big push up with gold. So yeah, it sort of did this little push up. On it coming back downwards, I think it came back down a little bit. I took another buy because I thought it was the bottom wick for it. Another buy with the stop loss down here. It flipped back up and it was really struggling. And then it was around here where I was like, nah, it's not doing what we're doing. And then I got out, and I ended up getting out for around break even. It was a 2 pip loss, which is not ideal. Now, if we go to, where can we go? Go to C Trader. What we've got here on our Dominion funding account, which is our 100K, because we're in December, previous month. So we've got what, 0.4, up 0.4% on that one. And then our funded X ones, they're pretty well the same. they're both down 0.5%. So one's up. Look at that. Yeah. 0.5% is 1K. So less than 0.5% we're down on that one. So that's okay. So the idea is what I've got is I have my Dominion funding as the master account. And then I have the 2 funded X accounts as the slave accounts. And they're 1-to-1. So if I take a 1 lot on the 100K, I take a 1 lot on the funded X. And that's purely because on funded X, their margin is the leverage. The leverage is 10-to-1. I'm pretty sure. So we got down here the leverage for funded Dominion funding is 1-to-30, and then funded X with gold should be 1-to-10. I'm pretty sure. Yeah, 1-to-10. So that's why we're doing them that way. But yeah, they're my trades. The gold outlook as I see it now. The weekly ranging, right? So we've got now gold is going to get a bit volatile. I think gold is it's gonna be bouncing a fair bit because there's a lot of different things at play. Be it on the political side, be it Trump or BRICS or China finding a bunch of gold, which tanked the price a little bit. So there's going to be I think anyway, a bit of sort of up and down movement. So we'll see what happens. So as we look at it on the technicals, right? As you look at it on the technicals, okay, we have on the daily. It looks like it's ranging, right? It's a big range, but it is ranging. All right, let's go to here, there to there. I think, yeah, and even then, it's probably in between here and here. That's a level, maybe about there. I think, yeah, that's a good level for gold. So it's got this huge, oh Jesus, yeah, 1100 pip range, right? This is going to be the deciding factor, I guess. If it's going to push up and try and touch and make new all-time highs over, what, 2800? Around the 2800 level? Or if it comes back down and then tries to find support at this level. And yeah, it just seems to be consolidating because otherwise it's just been on a huge bullish push. And again, look, you've got consolidation periods for it where it's things that look similar, right? Push up and then come back down and up and down, and like it's very much. Look, it looks like on the macro level, obviously it's on an uptrend, but again, you just don't know what's going to happen with gold. So you just got to take it day by day. And on the daily itself, I guess we're in a bullish trend. It's trying, but it's really not that bullish. Like it's trying, so it's got a big step down, and then it's creeping and creeping and creeping up. So on the 4 hour, yeah, again, same thing. You got this is a very strong level. It looks like that looks like a strong level. Even here, support becomes resistance. That classic trope. This made support, took off, came back down, found support, went up, blasted through it, and now support is becoming resistance. Is this a downtrend that it goes down, makes a high, a low, and then is this the next high to continue the low? Is that the is that the run? Right? We don't know. Just gotta wait and see how it all plays out. But right now, I'm looking in terms of a day trade. As a day trader, yeah, you're looking for. I mean, I guess right now, maybe sells down to 26.35. But again, you just got to take the session as it comes. But yeah, that's where we're at. Different position, different spot. As in, so now for me personally, me physically, I'm in a different spot than usual. I'm not at the office. I'm at my home office that I'm setting up, which is a spare bedroom / home office. But hopefully now I should be able to stream much more. Again, this is just for myself to keep myself accountable. And yeah, I think that's about it. I think that's about it. I'll try and stream more, and then yeah, if anyone's watching, support your boy with the links below. Buy some stuff. You know, help me be an affiliate or not. That's cool. But yeah, or just follow along for the journey. Just follow the journey. See what happens. We're going for our first payout. We're on our way to that first payout. But yeah, that's pretty much me. And yeah, I'll see you throughout the week. Bye.